All right, let's get technical. We've got Ben Watson. Oh, my goodness. Or maybe not. It's May 4th, of course. All right, Ben.
Oliver,
expecting
how long
less.
have we been doing that? Yeah.
The man behind the mask. All right. Don't give us the chokehold, okay? Don't force choke us, Ben Watson. Just walk us through the charts. All right, let's start with Boeing. What are we looking at here, Darth?
Well, I'll tell you what. This stock has been getting force choked into this descending triangle for quite some time, Oliver, and it continues to do so, right? This long uptrend that the stock's been in has been transitioning into this intermediate sideways, and this squeeze above the 231 support continues. Now we're starting to see the first real break in that level of support that we've seen in really most of the last quarter. Today's move to the downside, which was initially a little bit of gap up into a spinning top, now becoming a gap up sell-off on the upgrade, could lead potentially to this moving down as far as that 218 range, which is that next little horizontal line that I've got down there right around that 220 mark. So that becomes a challenge because this really represents the first time that we've seen a new, within the context of the intermediate time frame, lower low relative to these lower highs. So that could become a downtrend. It's not there yet. The day hasn't closed. We could see this come into play as maybe potentially a hammer candle at this support level. But long-term sentiment, flat, maybe starting to turn down below the overbought level. Intermediate term sentiment kind of coiling up and oversold with that possibility of maybe dropping down into that lower reversal zone, Oliver.
It's a big chart here, Ben. This is Boeing. Yeah. This is really a big, meaty part of the recovery story, given the airline importance of travel and Boeing as a supplier to those airlines, a very crucial part of that kind of recovery trade, an industrial stock that will inform the direction of others in its group, even those on the defense side too, where Boeing, of course, also has revenues. And this potential breakdown here is a little bit nervy, because if we do move and then we push down to the bottom end of that potential range, right, where if we drop from here, you're basically targeting like $200, maybe even lower, like 196, 197 down there.
Yeah, exactly right. I mean, that is ultimately the pattern target for this descending triangle. You know, I was thinking about this, and you know, as this gets deeper into the apex of the triangle, you and I have talked about that, the likelihood that this breaks back to the upside would increase. But again, this is an indication of where that's never a guarantee. And the fact is, this descending triangle has seen lower and lower and lower selling pressure, and that's been pushing prices down. And eventually we get to the point where we are, where prices are getting pushed now on a catalyst on this upgrade or whatever it might be below this level of support. And that, you're absolutely right. This is significant. This means something.
Yeah. Okay. So, all right, if it breaks down, then it's a little bit of a warning shot for the whole recovery theme. I do think it's going to be hard to talk about a reflation trade without Boeing. Or it finds support right here, but it's got to do it soon. The team at Bernstein and their analysts believe that it is a time to buy it. They had a price target of $196, and now they say that it's neutral. So basically, actually, they're saying not to sell it anymore, because that's basically where we're at. So the bullish upgrade today, I don't know, it's not really that bullish from Bernstein. So even though they're coming around and saying that you can own it if you've got it, it's not really very encouraging. So we'll watch this very closely. I mean, a major kind of rollover in the potential industrial complex if Boeing keeps dropping from here. Ben, what about for Kroger? I think I want to go there next, just because as we've seen the grocery stocks do pretty well. Kroger has had some wild volatility. We've looked at this chart a lot, but now also maybe a little bit of a rollover happening there too.
Yeah, absolutely. You know, intermediate overall sideways trend, it's been in a little bit of an intermediate term uptrend. And you can see that kind of coming up into that ascending triangle below the 38.40 mark. It failed that triangle. And now, I mean, this plays into the same type of pattern that we were just talking about with Boeing just flipped upside down. It got deep into the apex, but it broke to the downside, tried to regain that triangle on that sideways churn above 36.5. And now we're seeing today this broken support on the downgrade. Now we get a gap down sell-off. It's coming up a little bit off of those lows. Now, I'll tell you, Oliver, last night about 10 o'clock, I was in a Kroger store.
Okay.
And, I compared that to a year ago where there was nothing on the shelf in that Kroger store, the same store. And last night, shelves were overflowing. I mean, it really certainly does seem as if there is a bit of a slowdown in terms of sales, especially amongst those consumer staples products, things like toilet paper and paper towels and cleaning products and those types of things. So there is an overabundance. Does that translate into their earnings? That becomes the question, and we're seeing that kind of playing itself out here in the stock itself. But long-term sentiment rising up from overbought, intermediate-term sentiment kind of bouncing along that oversold line, not dropping significantly down into oversold. So maybe a little bit of a bright spot here, but maybe that just means continued sideways movement as opposed to a march down the path to the downside.
Well, this could get interesting if we do have broader equity selling. What happens to the staples? Do they function as those outperforming staples hedges? And the group is doing better today than the rest of the market. Staples are only down about 28 bips, but Kroger's down 4%. And Kroger is a little bit tricky, right? Because to your point, there was such huge demand for all these basic goods during the COVID period that Kroger may not necessarily be a great hedge going forward if it already saw the benefits of the specific economic dynamics from the past year. So does it hold on to those staple themes? Goldman basically says no. Goldman says to outright sell it, that it's going to drop $6. So Ben, does that seem like something that would be a straightforward path to get to $31, or do we need to see a real breakdown from that chart you were looking at?
You've got a short-term support at 34, but I think that 31 definitely comes into play there. That 34 isn't really terribly strong. I mean, it's been tested once or twice, but I think you definitely could see this make that move down into those lower ranges, the lower 30s. And the problem, obviously, is comparison, right? I mean, we're comparing things to and comparing revenues and comparing store performance and stock performance to a year ago when things were vastly different. And so that becomes the challenge here, not only for fundamental analysts, but for technical analysts as well. Okay.
All right, Ben, interesting move here at Kroger down. It's seriously responding to that Goldman Sachs cut, because the staples are doing all right, but Kroger getting punished. What about for Advanced Auto Parts? AAP next, also from the Goldman analyst team. This one's an upgrade, though. The response, okay, up about 50 bips, but off the highs of this morning. Started off real strong. We were trading at one point at 205, and now we've slipped down to 203, a little bit below there.
Well, I'll tell you what, I really like actually the look of this chart. Long uptrend. It's had this bull flag rally after the double bounce off of the support there at 180. We get this little bit of a, again, as you said, gap up sell off on the upgrade, but this is moving in a nice bull flag pattern. I've got those dotted lines in there kind of outlining this bull flag. It ran up, it holds back to the flag support at 196. We see the next leg higher. It doesn't guarantee that it's going to get all the way to the target at 217, but it's headed in that direction. Long-term sentiment is rising nicely and overbought. Only challenge that I see to this, despite the fact that we're seeing a little bit of a pullback today, is the fact that intermediate term sentiment is diverging bearishly versus price. So this might be what we get before we see a pullback to 196 and maybe another bounce at this point.
Okay. All right. So pretty strong, steady run to the upside here for Advanced Auto. The ChartMaster likes it, and it is outperforming the market today. Never hurts to get some bullish words, though, from Goldman with the upgrade there, saying to buy it, and price target at 227 with another 20 bucks, 22 to go from here at 205. Thanks, Ben Watson, a.k.a. Darth, a.k.a. Anakin. Thank you. One more for May the 4th. All right, Ben, you still got it? Okay, we got to go.